So we talked about C corporations and the evil empire. Well, one thing about C corporations, there's some good news. There's balance to the force. There are good things that do apply to C corporations when it comes to the tax law. So we have double taxation, the evil, dreaded empire, right? Cue the music, cue the Darth Vader voice, but we also have a good side of the force with respect to C corporations. Now, with double taxation, that's a huge drawback. With respect to the good things, there are various rules put in place to benefit C corporations, the main one being what's called the dividend received deduction. So many of you might be wondering, well, what stops double taxation from turning into triple taxation or quadruple taxation? Because remember, when it comes to double taxation, the idea of double taxation is there's a tax at the entity level and then the owner level. The owner can be another C corporation. It can be a partnership. It can be different types of owners. It can be an individual. It can be an estate or trust. You can have different types of owners. And you're exactly right to think that what stops a C corporation from owning another C corporation and then having double, triple, quadruple taxation down the line. And you're exactly right. That happens all the time when you have consolidated groups, consolidated entities, where you have a parent corporation that owns another C corporation. Very, very common. Well, dividend received deduction is put into place to put a stop to that. The idea is that if a C corporation owns another C corporation, depending on how much ownership, there will be a deduction allowed for the dividend that's received. Now, dividends are normally not deductible under the tax law, but you're allowed to do this in this case. Only if a C corporation owns another C corporation. I'm not going to go into specifics. If you need to know the specifics, your instructor, professor, whatever course you're taking, whatever information, you can find that information. But I want to note that's a very important aspect of C corporation tax. There are some good things. There are other good things as well with respect to various deductions that are allowed only for C corporations over other entities. So just keep that in mind. There is some good, but mostly it is bad. It's that double taxation, which again is a big drawback in the tax world. All right, so with that, let's get into it. Let's get back into C corporation taxation.